Hey, I get it. Thinking about investing can feel a little overwhelming. There's so much information out there, and it's easy to feel lost or even intimidated by all the jargon and numbers. Maybe you've heard stories of people making a fortune overnight, or maybe you've seen headlines about market crashes and lost savings. It's normal to feel a bit anxious when you're just starting out. There's a whole world of stocks, crypto, ETFs, and more. The financial universe is massive, with new opportunities and risks popping up every day. From the classic blue-chip companies to the latest digital currencies, the choices can seem endless. But don't worry, you don't need to be an expert to get started. But here's the thing, unlocking wealth isn't reserved for Wall Street pros. Everyday people, just like you and me, are building their futures by making smart investment choices. You don't need a finance degree or a fancy suit to get in the game. All you need is a willingness to learn and a bit of patience. You can start building your financial future right now, and I'll show you how. Whether you have a little money to spare or just want to learn the basics, there's a path for everyone. The most important thing is to take that first step, no matter how small. Let's kick things off with stocks. Stocks are one of the most popular ways to invest and grow your money over time. When you buy stocks, you're literally buying a piece of a company. That means you become a partial owner, sharing in its successes, and sometimes its struggles. If that company does well, your investment grows. You might even receive dividends, which are like bonus payments for being a shareholder. But remember, stocks can go up and down, so don't put all your eggs in one basket. The market can be unpredictable, and even strong companies can have bad years. That's why it's important to spread your investments around. Now, let's talk about crypto. It's fast, flashy, and risky. Cryptocurrency is the new kid on the block, and it's captured the world's attention with its wild price swings and potential for big gains. Bitcoin, Ethereum, you name it, crypto is super volatile. Prices can skyrocket one day and crash the next, so it's not for everyone. Only invest money you're willing to lose. Treat crypto like a high-stakes game. Exciting, but never bet more than you can afford to walk away from. It's exciting, sure, but not for the faint of heart. If you're new to investing, it's wise to start small and learn the ropes before diving in deep. Next up, ETFs, or exchange-traded funds. These are a fantastic way to get exposure to a wide range of investments without having to pick individual stocks. Think of ETFs as baskets of different stocks or bonds. When you buy an ETF, you're buying a slice of that whole basket, which means you're instantly diversified. Instead of betting on one company, you're spreading your risk across many. This helps protect you if one company or sector has a bad year. Great for beginners, and you can buy or sell them easily, just like regular stocks. Plus, there are ETFs for almost every industry and theme you can imagine. Bonds are like lending money to companies or the government. In exchange, they promise to pay you back with interest over time. In return, you get paid back with interest. Bonds are a way to earn steady income, and they're often used to balance out riskier investments. Bonds are usually safer than stocks, but their returns are often lower. They're a good choice if you want stability and predictable returns. Ever heard of commercial papers? These are short-term loans that big companies use to cover their day-to-day expenses. These are short-term loans companies use to fund their operations. They're not as common for individual investors, but they play a big role in the financial system. It's not the most exciting investment, but it's steady. Now let's talk about mutual funds, another great way to diversify. It's basically pooling your money with other investors to buy a mix of stocks, bonds, or other assets. This way, you get access to a professionally managed portfolio. They're managed by pros, so you don't have to pick the investments yourself. Mutual funds are perfect if you want to invest, but don't have the time or expertise to research every option. And don't forget about good old-fashioned cash. Keeping some money in your savings account is always a smart move for emergencies. Keeping some money in savings is smart for emergencies, but it's not going to make you rich. Interest rates are usually low, so your money won't grow much over time. Here's the real secret: diversify. The best investors don't put all their money in one place. They spread it out to reduce risk and increase their chances of success. Don't put everything into one investment. By dividing your money among different types of assets, you protect yourself from big losses if one area takes a hit. Spread your money across different options to balance risk and reward. This way, you can sleep better at night, knowing you're not relying on just one investment to succeed. Start small, learn as you go, and stay consistent. Even small, regular investments can add up over time thanks to the power of compounding. Remember, Building wealth doesn't happen overnight. It's a journey that takes time, discipline, and a willingness to keep learning. The sooner you start, the sooner you see results. Every day you wait is a missed opportunity for your money to grow. Ready to take that first step? Your future self will thank you for starting today, no matter how small your first investment is. Hit like, subscribe, and let's master the market together. With the right knowledge and a little bit of courage, you can unlock the door to financial freedom, one smart investment at a time.